Hi guys, welcome back again to the channel. So if you are new here, don't forget to subscribe down below. Currently we're on 118 subscribers, which is an increase of 8 since the last time I uploaded. So thank you all for your support. Also guys, if you want to, you can follow my Discord and join there, and you can also follow my Instagram and join there as well. Both links will be in the description for you guys to click and join. Today guys, we're going to be doing a bit of a different video. I'm actually going to be explaining why Gamestop dropped from $347 a share to $198 a share in the space of 40 minutes, which is also 43%. Which is crazy. Just a little disclaimer as well, I currently do not own the stock. Do not just take this video as financial advice. I'm doing this video purely for entertainment purposes only. Now with that being said, let's actually get into the video. GameStop's market cap has increased very much in the last 3 months, with the market cap being around about 1 billion just at the start of January, as you guys can see on screen at the minute, and with it currently sitting at 17 billion today as we record the video. Although guys, I do believe you probably haven't been living under a rock, and if you are aware of what the stock market is, you've most likely heard of what's been going on with GameStop. But if you haven't, I'll quickly break it down for you just now. Effectively what's happened is a lot of big hedge funds like Melvin Capital have invested a lot of money into GameStop, shorting the stock, predicting that it's going to go all the way down to around about zero. And investors have caught on to the fact that a lot of money is involved in this short sell, which has basically provoked a lot of investors to actually buy the stock in order to hold these short sellers at ransom in order for them to actually make some money. That way short sellers can't sell their stocks, and the people who have bought the stock can actually hold it and keep on driving up the price and holding these short sellers essentially at ransom. As we can see from this article here, it's basically saying that GME was described as taking its investors for yet again another wild ride. So by wild ride, I think he means that the stock is extremely volatile again, and the reason that I think he's saying that is because of the insane amount of volume that we did see yesterday. So as you guys can see on screen at the minute, the volume yesterday was 65 million, which is absolutely insane. And obviously if you are unsure what volume is, basically what that is how many times the stock has been traded in one particular day or one particular time frame, because you could look at volume on a 1 minute, 5 minute, 10 minute time scale, whatever way you wanted to do it. Now the reason I've brought up volume really early on is because it's a key fundamental to why the stock dropped 43% in 40 minutes yesterday. So as we can also see from the same article, it is basically saying that trading was halted 7 times between 22 minutes past 12 and 12 minutes past 1, which is an insane amount of times for a stock to be halted. If you're unsure with what halted is basically the stock being suspended for a particular amount of time within a period which you would normally be able to be traded in. So if we look at the graph at the moment, which I'll put on screen for you guys to see, at 12:17 PM we can see GameStop is trading a little under $350 a share, and it's topping just around about $348 is kind of where it hits its peak. Now if you look at the left hand side of the graph, you can see the volume representation, which I'll also put on screen for you guys to see just now, highlighted, which basically says that it was trading around about, in terms of volume, 134,000 times in a minute. So now, if we also bear in mind with what I just said there, and we look at this graph here, which is basically at 12:27, which is at 10 minutes ahead of the previous graph, we can see the price is then trading at $277 a share. And again, if you look to the left hand side, which I'll also put on screen for you guys just now highlighted, basically shows that the volume in the space of 10 minutes went from 134,000 shares in a minute to 1.56 million shares in a minute. So that is an insane amount of volume increase, and I think I found a reason to why that is. But first of all, obviously that there goes to show how extremely risky it is to trade GameStop right now. So obviously if you are looking to do so, always do your own research, know the precautions. There can be money to be made in it because of how extremely volatile it is and the unpredictability of it. And obviously the Wall Street bets rally that is behind it as well. However, you have to be extremely cautious when you do buy into the stock, guys, and be aware that things like this level of dip can happen with this level of stock. The question is still left unanswered. Why was there a drop of 43% in the space of 40 minutes? And I have found an answer to that. Well, I've got two for you, so let me explain the first one. First of all, I think it's very clear to say that there was a massive sell-off, which obviously was the cause of most of the volume. As a result of all the volume we've seen in the space of them 10 minutes, it drove the share price down from $348 a share all the way down to $198 a share. So again, it was a clear massive sell-off. I personally think that potentially the first reason for this could be that there was a massive panic selling as a result of the sell-off. It just created a massive snowball, which obviously resulted in more people selling. Now guys, what you have to bear in mind as well is when this happened in January the first time, it only kind of really got to around about $380 a share, and then it dipped massively. So trying to break through the 350, 360, 370, 380 mark for GameStop is going to be mentally challenging as much as it is going to be physically for the stock to break. So the clear reason that it's going to be physically challenging is that it's going to cost loads and loads of volume and loads of money in the right way in order to move the stock upwards. Now, because GameStop is a really traded stock at the minute, as you can see from the mass amounts of volume, a lot of people will be paying a lot of close attention to the stock every minute of every day for weeks on end. And the reason that this stock goes down so much quickly is because people look at the stock, and the second that they see it drop, they then start to panic sell their shares, because as well what you need to bear in mind is the stock only really got to about $380 a share last time. So when they looked at this, they look at history and they look and see that the GameStop got to about $380 a share, they kind of look at it and say, right, it's got to here before, and the second that they see it getting towards that area and it dipping again, that logic kicks in. Right, this happened last time, I need to sell, this is it, this is as high as it's going to go, and sell their stock. So that way it creates panic selling as well. So that is possibly one way which could have caused the massive sell-off. However, let me speak about the second way, which I actually believe is the case. So guys, what I actually think happened this time is potentially that they baited people back into the stock, and by doing so they've actually risen the stock price by buying the stock themselves and then caused a massive short sell-off. Now the reason they've done that isn't very clear. They could have potentially done that for the sake of maybe getting out of the short positions they have originally, or they might just be doing that to maybe make some money from it by some way. I'm not too sure why, but that's what I think might have happened. And at that point there, it is called what I call a massive bear trap. So hedge funds could have caused this massive dip. They would have obviously yanked out a lot of people that just jumped in the stock for the sake of not missing out on it again. And that way there, they've caused a huge trap that's caused a downwards trend, which is obviously why we've seen so much volume go all the way down to around about $198 a share from $337 or whatever it was before. Another piece of evidence that I did find that is absolutely crucial to kind of proving that this is the case. So if you were to look at costs, if you were to look at Nokia, if you were to look at AMC, and also look at the BlackBerry as well, all four of them stocks were all involved in the previous GameStop scandal that kind of happened in January, and again they're involved in it this time as well. Now look at all four of their graphs, which I'm going to put on screen just now. I'm going to show you Nokia first, and then I'm going to show you AMC, and then I'm going to show you BlackBerry, and then I'm going to show you costs as well. And that way you can look at actually all four of them graphs, and you can see that at the exact same time the exact same thing happened as well. So I potentially think that they shorted all of these potential stocks, and at that exact same moment they sold all of them as well, causing a massive downwards trend. Whether they did that obviously to try and make some money out of everybody that's involved in the stock, or they did that to try and short their positions and try and get out of them, it's hard to say. But that there is obviously kind of what I look to see has happened. To conclude guys, I think it's very fair to say that GME is a very volatile stock and has a mass uncertainty behind it when it comes to price predictions, and this way makes it very difficult to trade because of the risks involved. Now as well guys, though, there could be even more news coverage to GameStop and more people could yet again jump on the bandwagon, and this in turn could drive up the price of the stock, and again the return of that is basically everybody that is involved in it makes some money. So again, like I says, it does carry its risks, although there is money to be made in it, and there is also patterns you could follow as well in terms of the stock to also make some money in it too. But as always guys, this is obviously just my opinion. Do your own research, drop your own conclusions, get involved if you want to get involved. Obviously that is completely up to yourself. But as for now guys, that is going to be it for this video. If you did enjoy it, please don't forget to subscribe down below. We're currently on 118 subscribers, as I said at the start of the video, and we're trying to push up towards that 150 mark now. So like I says, if you are new here, subscribe down below, leave a like, and I'll see you guys on the next one.